I cannot sugarcoat it. Trading is one of the hardest things you will ever try, but the rewards, in my opinion, make it worth however long it takes for you to get to the point where you can make money consistently from the market. Hey guys, my name is Alex. I'm a full-time Forex trader based in Romania, and in today's video I'm going to show you my go-to strategy that I mainly use when I am on vacations. Now, as I said, this is my go-to strategy. It is not the main strategy that I use. If you guys want to check exactly how I trade most of the time, make sure to watch the two videos that I'm going to link in the description down below. In today's video, however, I'm going to show you the easiest strategy that one can use. So without further ado, let's see what this is all about. So I have in here gold, the 1 hour chart. You guys know that I like to trade gold, but this can be applied on any other market. So again, 1 hour chart, and we want to put a vertical line on the 1 hour candle that opens at 12 a.m. New York and closes at 1 a.m. New York, okay? For me, that coincides with 7 a.m. candle in my broker's time zone. Now, what I want to do at this point is I want to take a little rectangle and put it around the 1 hour candle, the 12 a.m. candle, right? The one that opens at 12 a.m. and closes at 1 a.m. So what I want to do now is I want to drop down to the 5-minute, and once we have a 5-minute candle that is going to close above the high or below the low of that 12 a.m. candle, so in here, you don't need a bias. So again, wait for the 12 a.m. candle to close and then drop down to the 5-minute, wait for a 5-minute candle to close either above the 12 a.m. candle high, either below the 12 a.m. candle low. Once that happens, you want to buy if you get a close above it. If you get a close below it, you want to sell. Your first take profit level is going to be 20 pips for gold, and then for Forex pairs is going to be 10 pips. After you reach that 20 pips mark, you want to make sure that you are going to take at least 80% of your position, and then you can leave a runner either with stop loss at break even, either with stop loss below the closest swing low or swing high to your entry point. Before we continue, I want to take a few seconds and thank Hanko Trade for sponsoring this video, and I do want to share with you the reason why I've actually decided to switch to Hanko Trade. They have a great variety of accounts, starting with standard accounts, ECN accounts, ECN Plus, and also Islamic accounts. They have a minimum spread, starts from 0 pips. They have a max leverage of 500, minimum commission, $2 per one standard lot. You can trade on MetaTrader 4 platform or MetaTrader 5. And the thing that I love about this broker is the fact that they have a 100% matching bonus promotion. Click the link below, sign up for an account with Hanko Trade. Once you deposit at least $100, they are going to match that. Click the link below. So let's see how this trade would have gone. Okay, so we have this candle closing above the 12 a.m. high, okay, which is right there. So now what I want to do is I want to take this and put it right there as if I entered at the close of that candle, okay? And then what we want to do is take this up for 20 pips. So our 20 pips marcation is around there. So that would have been my take profit being hit, or actually that would have been the level at which I would close at least 80% of my position. Your stop loss is always going to be 10 pips below the 12 a.m. candle low, right? So in this case, if that is the low of my 12 a.m. candle, and till here I would have 44 pips. I want to make sure that I'm going to take that 10 pips lower, so that's going to be 54 pips. Do not get discouraged by the low risk reward ratio, because you guys know already what is my opinion about risk reward ratio. I do not believe in it. What I do believe that matters most is the win rate, okay? If you can get a high win rate, then I believe that that's all that matters, okay? So in this case, we would have gotten a 20 pip in about, let's say in how much? In about 8 5-minute candles. So that's in about 40 minutes, I'd say. Okay, and this went for a total of 30 pips, and eventually it would have taken us out either at break even, either below this swing low, because this would have been the closest swing low to our entry point. Okay, if the market goes in your favor and then you have a higher swing low that is created, then you can use that one to anchor your stop loss right 1 or 2 pips below it. So this trade for today is already taken care of. So now let's see what happened during the previous day. So again, we're going to take a rectangle and we're going to put it from the high all the way to the low of the 12 a.m. candle. Okay, and then we want to drop down to the 5-minute, and here we're going to have to wait for a 5-minute candle to close above that high, or a 5-minute candle to close above that candle's low. Right, and we can see in this case that this candle closed above the high of our 12 a.m. candle. So when this candle opens, we want to go ahead and buy. So I would have bought at these candles close. In this case, our stop loss should be 10 pips below the 12 a.m. candle. So if the 12 a.m. candle's low is at 24 pips distance from our entry point, then our stop loss is going to be 34 pips, or 10 pips below that low. And then we want to target 20 pips. And in this case, we can see that if we would have left a runner, the market would have actually gone a lot more in our favor. So in this case, 20 pips were hit right about there. And in total, the market went for 110 pips almost, where I would probably start to take another part of my partial, maybe even close the entire thing, would be when I would see 2 consecutive bearish candles closing, which in this case would have been here. When this candle closed, you can see that we would have had a total profit of around 30 pips. So when that happens, you can either close another portion of your runner, because it is supposed that you already closed at least 80% of your entire position at 20 pips profit, and in here you would have taken something off again, and then gradually the market starts to go higher for a total of 110 pips. So this day would have been a total success as well. I'm always going to put this to a minimum of 20 pips, okay? And at the end of our little session here, we're going to go ahead and see how much money we could have made minimum, considering that we were only able to take 20 pips out of every setup. So now let's move on to another day, which is here. We have this candle, which is the 12 a.m. candle. So we want to put a rectangle from the low all the way to the high, and then drop down to the 5 minutes. And now we want to wait for a candle to either close above or below that candle's low or high. So in here, we can see that we have this 5-minute candle closes nicely above our high. So when we have this candle closing, we want to go ahead and buy right there. In this case, stop loss would have been a little bigger. It's 53 pips plus another 10, so that's going to be around 63 pips. And this is the stop loss, so let's color this in pink. And as usual, we're targeting 20 pips, and then we want to make sure that we're going to take at least 80% from our position. So 20 pips would have been around here. And then the market continued to go a little higher for a total of 60 pips. So in this case, another day in which we were able to take at least 20 pips from the market. 3 consecutive days, 3 consecutive wins. We want to go to the next day, which is going to be this one. 12 a.m. candle, we want to mark the high and the low, and then drop down to the 5 minutes and wait for a 5-minute candle to close above or below that candle. In this case, we can see that we had this candle closing above that level over here. So once that candle closes, we want to go ahead and buy. At the close of that candle, our stop loss would have been 33 pips plus another 10, so that's 43 pips. We always target 20 pips if we're trading gold, or 10 pips if we're trading Forex pairs. Obviously, for Forex pairs, your stop loss is going to be a lot smaller than this. Okay, it's not going to be 30, 40, 50, 60 pips. It's actually going to be a lot smaller than this. Okay, so in total, after we hit the 20 pip mark, which is around there, these produced an additional 15 pips, right? So in total, this market would have gone in our favor for 35 pips. Okay, so another day, another win. Now let's move on to the previous day, and we have this candle over here. So the 12 a.m. candle from the high to the low, okay, and then drop down to the 5-minute. And let's see how this one went. So we need a 5-minute candle to close below that candle's low. In this case, we can see that we had this candle closing below that level, okay? Now, it doesn't have to be a bearish candle closing below or a bullish candle closing above. You can see that it can actually be a little different than that. So in this case, we would have opened a bearish trade at this candle's close, which is right there. Our stop loss in this case, it's 23 pips plus another 10, so that's going to be 33 pips around here. So let's make this pink because this would have been our stop loss. First take profit level would have been 20 pips, bullseye, just like that, okay? Exactly 20 pips. After this, you want to make sure that you're going to take at least 80% off from your position and either put stop loss at break even or put stop loss above the closest swing high to your entry. Another day, another win. Let's move on to the previous day. So in here we have that 12 a.m. candle. We want to drop down to the 5 minute. And once we have a 5 minute candle closing above that high, which we had that one here, we want to make sure that we're buying. So that's going to be right there. In this case, stop loss would have been 13 pips plus another 10. So this is a smaller stop loss. So that would have been 23 pips. And we always target 20 pips for gold and 10 pips for Forex pairs, right? So in this case, our first take profit level where we take out at least 80% of our position would have been hit around here. This day, if you would have left a runner, even with stop loss to break even, you can see that after the 20 pips mark was hit, if you just leave the runner, you would have gotten a lot of pips. You would have gotten a total of 250 pips. We're not going to count that extra at the end of, our little demonstration here. We're just going to count those 20 pips that we get every day. Now let's move on to the previous day, which is here. 12 a.m. candle. Again, mark the high, mark the low, drop down to the 5 minute time frame. And now once we get a 5 minute candle closing below that level, which we see happen here, we want to sell. So in this case, if we sell at this candle's close, and we're going to target 20 pips, that would have been hit during this candle's trading, and our stop loss in this case would have been, let's see how much we have till that high. So we have here 33 pips plus another 10, that's going to be 43 pips. Now I don't know if you're noticing, but the drawdown with this method is almost inexistent, which makes this method to be extremely lucrative for those of you who are doing challenge accounts. So if we move on to another day, the previous day, in here we can see that we have a 5 minute candle closing below the 12 a.m. candle's low. So once that candle closes, we want to go ahead and sell. So now our entry would have been there. Till here we have 26 pips plus another 10. That's going to be 36 pips of stop loss. And as usual, we target 20 pips, which obviously we did get that quite fast. And in total, if you would have left a runner, the market would have gone for more than 50 pips. Another day over here, the 12 a.m. candle, we want to mark the high, we want to mark the low, right? And then drop down to the 5 minute. And in here, we want to wait for a 5 minute candle to close either above, either below that level, that rectangle, right? So we have this candle closing above. Okay, so in this case, once that candle closes, we are going to buy. So it's over there. Stop loss in this case would have been 28 pips plus another 10. That's going to be 38 pips around here. So let's go ahead and make this pink because it would have been our stop loss. Okay, and as usual, we're going to target 20 pips. Now, in the case of this setup, you can see that it came pretty close to our stop loss, but eventually it started to go back in our favor, right? So 20 pips would have been hit around here. So another day, another win. Let's move on to another day. So in here, we're going to have this candle. We mark the high and we mark the low. As usual, drop down to the 5 minute. You already know the drill. And once we get a 5 minute candle closing above or below that level, we want to go ahead and buy, right? So in this case, we can see that we had this candle closing above our level. So once that candle would have closed, we would have opened a buy position, which is right there. Okay, our stop loss in this case would have been 38 pips plus another 10. It would have been 48 pips, which is around here. It would have resulted in a loss. So because of this, we're just going to leave this alone like that. So in here, we have a 48 pips stop loss. If we move on to a previous day and just do the same like we did till now, put a rectangle on the 12 a.m. candle, drop down to the 5 minute. And here we want to wait for a 5 minute candle to close below that low or above that high, right? So we have this candle doing that. Once this candle closes, we want to go ahead and sell, which is right there. Stop loss in this case would have been 57 plus another 10. This is 67 pips. So in this case, if you are doing a challenge account, you'll want to make sure that you are going to enter the position with a smaller lot size to make sure that if this is going to result in a stop loss, you will not fail your challenge. Okay, so in this case, we can see that the market would have given us 20 pips with a minimal drawdown. Okay, so the drawdown in this case was 12 pips for gold. That is nothing, trust me. And then we get the 20 pips, and actually we get more. If we would have left a runner, we would have gotten almost 60 pips. And if we go back another day, we're going to check this one out. From the low to the high of the candle, drop down to the 5-minute. And in here, we want to wait for a 5-minute candle to close below that low or above that high. This is the first candle that is part of the next 1 hour candle, right? So you can see that it's immediately after that 12 a.m. candle closed, we get a 5-minute candle closing below that level. So once this candle closes, we want to go ahead and sell. And guys, you can see that it is really, really easy to trade this way, even from your phone, okay? Because the rules are not hard to see. You don't have to draw a lot of lines. You don't have to analyze a lot of stuff. You don't even need a market bias, okay? This is the great thing about it. You just need to be aware of when the candle that opens at 12 a.m. and closes at 1 a.m. New York time zone, when that candle closes, you want to mark the high and the low, and then just keep your 5-minute chart open, or just check your phone every 5 minutes. And if you get an entry signal, you execute. So in here, our stop loss would have been 55 pips plus another 10. So that would have been 65 pips. So again, if the stop loss is big, then you want to make sure that you are going to enter the position with a smaller lot size to make sure that you're not going to, get kicked in the butt. Okay, so in here, we would have gotten those 20 pips around this level. And if we would have allowed our trade to go further, if we would have had a runner with either stop loss at break even, either stop loss right above that high, because that is the closest swing high to your bearish entry, then we would have gotten in total almost 300 pips. Okay, almost 300 pips. So that is absolutely crazy. So I think that by now you already got the picture of how to handle this strategy. Okay, so now let's see how many wins did we have and how many losses did we have. And also, I want you to remember that we're not going to count the pips that the runner would have capitalized on for us. Okay, so we're only going to count and we're only going to add up the 20 pips. So we have this setup here. So that's 20 pips. This was another 20, and this was minus 48 pips. In here, we have another 20 pips, another 20 here, and then in here, another 20. Then another 20 over here, in here, another 20, 20, 20, and today, another 20. Again, without counting also the pips that our runners could have capitalized on for us. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So in total, we took 12 trades, 1 trade every day, out of which we had only 1 loss. 11 wins and 1 loss. I believe that's a pretty fantastic win rate, isn't it? And right now, you can see that your risk to reward ratio does not really matter, because we were able to see that with every setup that we took, the drawdown, before we actually got the 20 pips, the drawdown was minimal to non-existent almost. Okay, so this is a very good strategy, very suitable for those of you who are doing challenge accounts. So in here, because we had 11 wins times 20 pips, that means 220 pips. And because we had this loss of minus 48 pips, let's just say minus 50. So we have 220 pips minus 50. So it means that we made a profit of 170 pips. Trading 1 setup every day, minimum drawdown, only 1 stop loss hit. So only 1 loss out of 12 trades taken. So this is more than 2 weeks of trading. This is going to make at least some extra cash for you. Depending on how much money you're going to put into this, you can actually change your life with it. As always, you know that I encourage you guys to keep everything simple. In trading, you are forced all the time to learn to do this in order to successfully make an income from trading. I hope you enjoyed today's video. Once you're gonna back test what I've showed you here in this video, I hope you are going to get fantastic results with it. Let me know in the comments down below. I hope you guys found this insightful. Until next time, keep it simple.